All right, here we go. Gang's all here. We got a lively chat, rip rocking and roaring once again. So, hey, I'm going to get into it. Still waiting for the my fellow YouTuber, international man of mystery, and the artist formerly known as Blue Lion Finance, Ari Gutman. He's in Israel, so it can be kind of wonky with the time change, but I think we had everything ironed out. So we'll see. Oh, look at this, dude! There he is. Ari's in the green room. He's backstage, so I will keep him there for just a minute. I'm going to go through my like what an international man of mystery, just pop right in at the last absolute second. I love it, dude. So I'm going to keep him in the green room hanging out. He's going to get all jacked up on soda and caffeine and whatever he does back there. So anyways, I'm going to go through right here and do you guys. I'm not going to do you guys. I'm going to show you guys what I've been doing this week, dude. It was a busy bee. I'm a fuzzy buzzy buddy this week, and let's bring in what I did. Here we go. Look at that. Let me hide myself here. I'll keep myself on for a minute. So I got three portfolios I share in the channel: the Bridge, which is the taxable, self-directed IRA, and then the Roth account. So check it out. We'll just go real quick from the bottom, work our way up. Added to my Nexstar Media position. Shout out to KC, Caitlin, Kate, who turned me on to this. And what's up, Philly? It's a snow evening. Dude, Poland we've got. I love it. Let me know where you guys are from. I always love to hear where everyone's tuning in from. So really quickly, added to my Nexstar Media position, 4 shares this week. Added 3 shares of Celanese, ticker CE, which I've just started diving into their annual report because I want to get a much better feel for the business, and I'm liking what I'm reading. It's crazy. They have a lot of chemicals that are behind the scenes. I was just reading that they make cellulose acetate tow, which is something that is used in anti-fog film, which you'll see on freezer doors, ski masks, windshield, crazy stuff. You don't think of that, but they're behind that. So anyway, and then to round out the week, I added 5 more shares of Intel. Why? Because I don't know. I like what Pat Gelsinger is doing. I believe in Pat Gelsinger, and I don't know. I'm going to do that. That's a nice little turnaround play. And here's the dividends coming at you that we received. Got Lyondell Basel, $15, $29 from a good old J&J. Archer Daniels Midland got $4. Exxon Mobil, $26.39. Dude, they are awash with cash in that oil industry. And Snap-on gave me $9.72. Next up, we're going to hide me because I'm blocking it. This is the self-directed IRA where I've done all the buying of BDCs. That's official. Yours truly is a BDC, a business development company investor. Check that out. 25 shares of Maine, 25 shares of ARC. You can see the numbers there. You can go back, pause the video if you want. We'll just get through these quickly. I want to get to my guy waiting. We're not going to keep him waiting too long. 50 shares of ARC, 50 more shares of Maine. So I was up to 75 shares of Ares Capital and Main Street Capital on December 5th on the same day. And of course, as soon as I buy, like most stuff, it comes down in price. Added one little share of Realty Income. Then I added on December 6th more Ares Capital and more Enterprise Products. I sold out. By the way, Enterprise Products, love it. I think that kind of like Wayne Gretzky, trying to skate where we think the puck is going to be. I still think oil has a very bright future, although maybe thinking out 50 years, we could start to see, and I'll let Ari talk about this because this is a macro thing about what is going to happen with oil. And dude, I think we're going to be producing a lot of oil here, and especially we don't know what's going to go on with Russia, especially if we have another Cold War part 2 with Russia going on. So we'll see that. I sold 6 shares of ONL, which is Orion Office. I wish I would have sold that. That's, as I say, is the company that after Realty Income merged with Verit that they shat out. And then we bought 25 more shares of Maine on the 6th. And then wrapped up the week, 10 more shares of ARCC at $18.90 and Enterprise Products. Okay, bring me back here real quick. Hi, how's it going, everybody? We got dividends from J&J, Archer Daniels Midland, Microsoft, only $1.36. I have 2 little shares that I'm still hanging on to. with Kung Fu like grip. And ExxonMobil, $13 from there. Wrapping it up real quick here. I sold a share of Warner Brothers Discovery because I wanted to add one more share of Enterprise Products. So I got that at $24.49. You see right there. And the last but not least, something I want to point out to maybe you're a newer investor, or maybe not, you don't know. J&J, I got them in all three portfolios. And then Unilever, if you can see on the screen right there, paid $8.42 from Unilever, but it's an ADR, which is an American Depository Receipt. I don't know which bank handles that, but they're not doing it out of the goodness of their heart. So they take a small cut to allow us to buy a foreign company on an American exchange. So we're really getting a receipt for that, and it costs 10 cents. So that cost me 10 cents, and then here it is all wrapped up in a nice little bow in the three portfolios, $135.22 on that. I see Ari cheering. Let me stumble my way through this. Let me stop sharing this. Let me bring Ari on, and I hope I can hear him. Say something, sir.
Russ, are we good to go this time around?
Can't I hear him? Hold on, Ari, and everybody. I told you guys. I said I was going to stumble my way through this. Oh, this is why. I got to put my my AirPods on. All right, you guys could probably hear him, but let's see here now. All right, Ari. Let's see if I got him now. I got I call them my Russ pods. So, all right, can I hear you now?
Can you hear me?
Yes, I did it.
We're in. We're good. We're live.
I got the Russ pods on. What's up, man? Hey, what's up, Ari? Happy to have you.
How's it going? It's good to be back on here, round two. Hopefully everything goes smooth this go round.
You look wonderful. So a little backstory. Ari and I, last Sunday, we did a chat, and apparently it's just for him and I that, we got to talk, which was cool, but I wanted to do it for all you guys. And, dude, the feed was awful on StreamYard. They're supposed to do local recordings, so they'll record mine and then his, and then upload them both. But his, for some reason, I couldn't figure it out. It just said there was an error. So it was completely unusable. And I can hear you, man. This is wonderful. I love this.
The picture looks like it's coming clear. The sound's coming in good. So, hopefully we're good to go. And what a week to get back on live stream here with you and actually just talk about macroeconomics. I think we have quite a week ahead of us. So I'm excited. Actually, that last week's call didn't necessarily work out, and it set us up for the perfect call this go round.
Oh, yeah.
Also got to say, man, kudos on the dividend returns. That was exciting to at least be in the green room and watch the breakdown real time.
Yeah. So, hey, $135. Of course, two of the accounts, though, I can't touch it without penalties, so it's okay, but that's why I got the taxable going. And again, I want to say what's up to everybody that's watching us and coming to us from all over the world. And I look at this one stood out to me. Let's see, we got Steven. So he remembers. I love it. Hold on, let me find this here. Man, you guys with the comments. I love it, man. I love it. Darth Dividend, we got Ryan Williams, who you're familiar with.
Ryan.
Where did it go? For Christ's sake. I shouldn't say that. That's my Here, what's up, MM3, Steven? So for those of you, I was a machinist mate third class, and we call people by their rank. So that's kind of cool. That kind of warmed the cockles of my heart. It's been a long time since anyone's called me MM3, so I appreciate that, Steven.
You got to change your YouTube name in that regard.
Yeah. Now what I got to do is get rid of this guy right here. This guy right here, because I have the autofocus on the camera. And I'm always fighting with his big dumb head over there because it starts focusing on him because it sees a face, and then I go blurry, and then I'm having to go like this, like, hey.
It's Big Ben as well. I mean, you can't, he's going to steal the spotlight.
Yeah. So anyway, who are you? I give it really quick. I'm sure most people are familiar, but I'm going to let everyone know really quickly who you are, where you're from, what's going on.
Yeah, absolutely. So like I said, it's great to be back on here. Everybody who's out there, my name is Ari. I actually started my YouTube channel a few years back. It started off as Blue Lion Finance with a very simple mission in mind, and that was really just to help one investor per video. And how did I exactly measure that success? Is if I got a like or even just a view, that for me just counted as a success. Hopefully I said something of value. Slowly but surely the channel just started growing, one thing to the next. That channel helped me get then an entirely different job, and so here I am now with my channel. I changed my real name, which is Ari Gutman, and I was in Manhattan when I first started my channel, and now I'm actually across the world in Israel working for a fintech. So it's just been an exciting adventure.
And that's Shamir Seta. That's yeah, that's who you're
There
working
we go. Tip ranks. There we go.
for. Which I need to check out. I was going through some emails on my Gmail account, and I saw a Tip Ranks email, and it was something about Warren Buffett's portfolio. So I clicked on it, and I was kind of pleasantly surprised with what I saw. So I'm like, oh, great, this is all I need, just another platform in my life. That's but so I still have yet to dive into Tip Ranks, but I've seen people use it on other channels when they're talking about companies and whatnot.
Yeah, look, I mean, I don't want to make this totally about Tip Ranks. I think what's interesting, what attracted me to Tip Ranks in the first place, because I will say right off the bat to everybody who's watching, I actually said no to Tip Ranks at first. I enjoyed my profession in Manhattan. I was working in real estate development and management and doing YouTube and investing on the side. And Tip Ranks had reached out to me to do more of their webinars and economic reporting, and that sounded incredibly fun. And I had plans in my head actually then to come to Israel and eventually travel. So here I am now in Israel, and I still have plans ahead of myself to travel. But what attracted me to Tip Ranks is the fact that it's really not like you're seeking alpha or your motley fool, right? We're providing tools for the investor to just do deeper dives on their investment. So it's almost like we're providing that toolkit for an investor to then just go deeper into their analysis or to do their due diligence, which has been really exciting. So believe it or not, I actually started off at Tip Ranks as an anchorman, and then we actually did away with Tip Ranks TV, and now I'm the head of customer success. So I'll throw this out there for anybody who is watching and wants to take advantage of Tip Ranks to some capacity. Shoot me an email, land on my channel, find my email there, and I'll be happy to hook you guys up with a deal of some sort.
What's your email? I'll put it in the chat if you're okay with that.
Sure. I'm gonna do my my Gmail for my YouTube channel, but it's gonna be bluelionfinance@gmail.com. bluelionfinance@gmail.com. So this way I know it's from you guys watching this, and like I said, I'll set anybody out there who's watching up with a nice deal from Tip Ranks to enjoy for the new year.
Excellent, dude. I like that. Geared toward investing. I mean, there's so many great tools out there. I love it. I don't know this. What does this mean? You never told me you're an Entourage fan. What am I missing there?
Ryan, are you referring to the Ari Gold package? I think that may be in reference to. I don't know if he's able to answer as quickly.
Yeah, we'll see. He'll get it. He'll answer
pop back
it
in.
Let me go back a little bit here.
I hardly ever watched Entourage, but Ari Gold, I mean, we share the name, so I do have a package on my YouTube channel. That's the Ari Gold package, and I did steal that from Ari Gold himself.
I like it. Delu is from Poland. I love that. Shamir up there in Canada. Snowy Canada. Dude, I just heard your guys' song. I was at the United Center on Friday watching the Blackhawks lose to the Winnipeg Jets, and I like that song, "Oh Canada." It almost gets you a little misty-eyed here in the Canadians, the Canucks, the Knuckleheads. FIS, Gangers. Any thoughts on FIS? I don't know FIS off the top of my head. Do you, Ari?
Yeah, I got to be honest. I'm not also.
For you gangers, I'll look it up real quick. Oh, you know what I forgot to do? As I'm going to go on to my, let's see. Let me do this. Let me put us both stacked on top of each other. And I'm going to bring you all to the land of simply safe dividends. So not Tip Ranks, sorry. But, I may be a convert. Let's see. Yeah.
Look, wherever you get your financial information, that's what's most important. As long as you're getting the right information, that's all that matters.
Yeah, so I think one of the Stevens, I said they like this, the quick news bites. Dude, SL Green,
This
I'm
is
not a
Simply
fan of.
Safe, yeah.
Yeah, this is Simply Safe Dividends. This is their latest page, so it's like news. SL, like they'll show here, SL Green cut their dividend 13%. They gave a little bit of information on VF Corp, which I don't know. That's going to be interesting. They got a new CEO on board, and we'll see if they're going to cut that dividend because that yields 7.23%. I'll just go through these super fast, everyone. MasterCard hiked their dividend 16%. Stryker grew at 7.9%. Yeah, and anybody watching, you can go back and pause this if you want to see what's on the screen right there. John Deere raised at 6.2%. Small yield, 1.10%. Carrier, which I believe was spun out of Raytheon, right? I think Carrier was, which was it used to be RTX. I think Otis and Carrier were spun out as their own individual companies from Raytheon. Raytheon Technologies, I believe. They raised that 23%. So HVAC company, big old raise. We got CubeSmart. Dude, there was a lot of raises this week. So your CubeSmart, 14%. I think somebody mentioned they wanted to know about Hanes brands. Maybe we'll dig into that in a minute. American Tower, you don't have American
It's an
Tower.
interesting play.
Yeah, 6.1%. They increased their dividend, and they've been raising it every single quarter. Just nutty, dude, since October 2020. Yeah, looks like they just keep raising that thing. Let's see.
Do you know how many years the American Tower has dividend history? Are they They're not an aristocrat, if I'm not mistaken, correct?
Let's find out. This shows 9 years of dividend
9
growth
years,
for
okay.
American Tower. So, yeah, they're getting there. Um, and we'll start from the top till we get down. Douglas Emmett, which was an office REIT, again, that's the second one this week that cut their dividend. They reduced it 32%. Pfizer, 2.5% little dividend increase. Abbott, 8.5% hike. They are a dividend king. GlaxoSmithKline, they upgraded their dividend score from 40 to 70. A couple more here to get through. Broadcom. Sorry, I saw Waste Management down there. Harris, he says that stock's trash. So, 12,
Which one,
12%
Broadcom or Waste Management?
Waste Management. He'll be like, dude, that stock's trash. 7.7% hike for
one man's trash is another man's treasure.
Yeah, I think we're getting into the nitty-gritty here. WB Carry, only a 0.4% increase, very small, but they've been increasing their dividend every year since '98. A couple more. Edison, EIX, 5.4% increase. Ugh, getting tired going through all these, man. Ecolab, 8%. I'm sorry, Ecolab on the 8th, 3.9%, and this two more, I think. Zoetis, 15%, big hike for Zoetis. And there it is. Bristol Myers Squibb, 5.6% dividend hike. And we were going to look up FIS and see what that was because it's not ringing
Fidelity.
well. Yeah, Fidelity National. There we go. Yeah, interesting. 2.68% yield. I don't know. Maybe you got a few thoughts. I'm sure you're looking at. What am I? So we're on there. Sorry, I paused because I'm paranoid, so I keep my phone going next to me so I can see that I know we're still there and live. 18 years uninterrupted streak. Looks like we're just 23%, 10-year growth. This is a stock I've actually honestly never looked at.
We've looked into.
Yeah, interesting raises. That yield though, 124% above their 5-year average, and the forward PE is 10, which is way below their 5-year average of 19. So this one would be earnings payout ratio 29. Yeah, that doesn't look too bad. Let me see if they've been diluting shareholders. They did quite a bit there. Jeez Louise. Went from 332 million in 2018 to 627 million in 2020. They've been buying back a little. So
share buybacks.
Yeah, I don't know. That would be interesting.
Yeah, this is pretty neat. I've never actually utilized Simply Safe. It's pretty interesting to see you go through these.
Yeah, this is just my really quick interest coverage ratio, 7.3. Yeah, I might. I don't know. I guess I would have to take a peek at that a little more in depth. Obviously not here, but Interesting. Oh, you know what I want to do? Give him the. I'll give him the alpha spread. Are you familiar with alpha spread?
No,
I've really. Yeah, alpha spread is.
Did you? I think you mentioned this the last time we connected.
Yeah.
If I'm not mistaken.
So alpha spread does intrinsic valuations. Let's see. Get it in here.
Your top 3 resources. You have Simply Safe. It looks like Alpha Spread and Seeking.
Seeking Alpha. Yeah, it's a third.
Okay.
Yeah, so here they give an intrinsic value of $109 for the base case. So it's about 35% undervalued. And then the worst case, which is 5 years of negative growth, would be 83. So they're still saying it's undervalued 16% like that. And again, the intrinsic value is just a guesstimate, a ballpark. You know, you it's like knowing somebody needs to lose weight without knowing exactly how much they weigh is what I say. But yeah, I'll just scroll down with this real quick. The same thing. They show a lot of the financials, and I mean, you can click on that, and they'll go really in deep. They go through the balance sheet, the composition for the companies. One thing I really like, yeah, you can click on all these, and their efficiency metrics. But I like the capital structure, showing you the market cap. Like they break it out really nice. The debt, they'll show minority interest, and then subtract cash and equivalents, and then give you the enterprise value. Which, for those of you that don't know, enterprise value is if you were to buy the whole entire company, debt and all, that's what you would have to pay. Yeah, they give the Wall Street price targets, which is nice. I mean, there's more tabs you can really click on, showing you all their competitors, which is pretty interesting. They'll show you their suppliers. So if you click on suppliers and customers, so right there, they're suppliers in the U.S., MasterCard, WEI, and then you can go down the rabbit hole, click on all those. Then their ownership, they'll show you if there's the insiders been buying or selling, which, as we see, there's only been net sells going back 12 months. So that's something that's interesting.
Not a great sign when your insiders are selling out.
No, but yeah, I mean, it's a really interesting site, shareholder return. Then they got their website and a little bit about when they IPO'd 2001. And then they have the same thing, kind of like Simply Safe does with like the balance sheet and all that, which I don't remember where that is at. But yeah, and then you can go straight down to they have all these reports. It's just fun. I don't need this to turn into a alpha spread, but yeah, same thing. You can go into the balance sheet and the financial statements and look at everything on there. So that's one that I've really been using a little bit more too. Yeah,
more recently.
So, all right, let me shift gears really quick, and I want to know, because this was a thought of mine. I think oil is still important. I think it's gonna be phased out eventually, but we still put oil into so many just things, everything. Like oil is tied into plastic. Just you know what I mean? What are your thoughts, your macro thoughts on oils? What do you think? What's your take on it?
Yeah, I heard when I was in the green room, if you will, I heard you sharing your 2 cents a bit about oil. I believe ExxonMobil's in your portfolio, if I'm not mistaken. Exxon was actually in my portfolio as well, and when it peaked, I actually sold out of it because I didn't have a ton of shares with Exxon, but I decided to cash out, and I am in the process of trimming my portfolio. So, but on oil, I think from the macro perspective, in first of all, I think oil can phase out much quicker than we all believe. If you just look at the rate at which we're advancing, it's actually pretty incredible. And it wasn't too long ago, 10 years, 20 years ago, right? It's like everything that we have now at our fingertips just wasn't even available. And the rate at which we're even seeing the government react to EVs, right? We had Biden come out and announce the plan for the United States to move forward with building the charging stations, which is it's pretty incredible. I mean, sweeping changes will be made. Now, I don't necessarily think these oil companies are going to disappear quickly, because you have the vast majority of Americans and those around the world still operating and running vehicles on gas. And so I think what would be wise is to, still play your oil stocks now, because you can still take advantage of them, play off volatility that's happening in the market. particularly right now with Russia, and we saw that a little bit, a week or two ago with China. When China started to ease up on their zero COVID policy, oil actually started to run back up because now we have more demand for oil. So I think there's definitely opportunity that still lurks within oil and energy, the energy sector in and of itself. Now, personally, we'll call it an ethical front, if you will, but like moving into the future, I would like to see companies continue to move in a green direction. And I think, 10 years, 8 years, 10 years from now, 15 years from now, those who are doubling down right now on energy, green energy plays will actually be in a very good position, come the future. But in the interim, certainly I think if you're playing, an ExxonMobil type of play, then yeah, absolutely double down on it. And yeah, I don't want to say I regret selling out of my position with Exxon. I didn't have a huge position with it, but it's a solid dividend stock, and it's a solid dividend stock I think you can hold in your portfolio still for some time. I don't know your thoughts on that.
Yeah, I haven't. And in the comments, let us know what your thoughts on energy and oil stocks are. But I haven't been adding. I do think, obviously, it's going to be severely impacted by the world shifting away, especially from EVs. And it's been a while since I looked, but a lot of their revenue is from like gasoline, from fuels. So yeah, even though it's in plastics and whatnot, it's not to the amount where it's anywhere relatively close to what is used for energy, for fuel, for yeah. So I think China, it's going to be interesting because everybody can pass all the restrictions, and I know do you know the number? I think California. Who's in California? That I'm asking those that might be watching, but yeah, I think in California they went by 2035. Like there was a date that they don't want any more uh, internal combustion engine vehicles built.
Yeah, I think you're spot on with that. Sold. I think you could still buy them, if I'm not mistaken, used, but it's going to be you can't buy new vehicles. I'm not 100%, so I don't want to declare that, but you're spot on. I think with 2035.
And my thoughts, I actually are. I put in a buy order. It didn't get down there this week. I wanted to buy more of the URNM, the Sprott Uranium ETF, because man, as somebody that lives on top of some microreactors, I think that microreactors are going to be the future because as much as I do like solar and wind and all that stuff, I mean, it's just not enough to power these economies that we have. And I really just do think that we could see a time when planes are powered by microreactors and just all different kinds of vessels, trains, ships. Because that has to come from somewhere. Even though we're all on EV, it's going to have to, I think coal is still powering a lot of the EVs, so it's not as clean as people think. But yeah, there's URNM, and then I think URA. There's two main uranium ETFs. And the reason I did that is because it's so hard to get exposure. Other like Cameco, CCJ, Shamir, shout out up there in Canada. It's a Canadian uranium company, but like Kazatomprom is a Kazaki uranium company, but I'd have to trade I think on the London Stock Exchange for that, and that's not feasible for me here. So yeah, like your URNM has a 0.85% or 0.84% expense ratio, but honestly, I just think uranium is going to be more in demand. I think it is the green, clean technology of the future, and it's here right now.
I was just listening to Lance Fritz, who's the CEO of Union Pacific, and it was just interesting to hear his take. I mean, even the rails are looking to go green. And so this is just, we're in the process right now of advancement and modernization. And I don't, again, I think when we're reluctant to make these changes ahead of the game, those are the investors that then are playing catch up. And so I think it's wise right now for investors to be thinking 5 years, 10 years ahead. Where are we going to be? And not necessarily just remaining at where we are today. However, in understanding, right, that barrel of oil, if you will, isn't fully tapped, I would say then, hey, it's worth our time now to take advantage still of what oil has to do for us. And ExxonMobil is still a fantastic investment, in my opinion, right now.
Yeah.
And I see you have someone, Shamir here. I invested in Tyson recently as well. You are welcome. I think Tyson is a beautiful investment right now. And, I actually got the idea. There's another channel out there, so I give credit to where credit is due. It was put in my radar by a channel, Financially Fit, and Colton brought that one to my attention. But I've been running with it, and I actually WhatsApp, voice noted him today. I said, put 1,000 on Tyson, and I'll double it, and I'll put 2,000. And he said it may go down, so I still may throw my $2,000 onto Tyson. I think it's an incredible stock opportunity right now. Have you looked into it at all, Russ?
Yeah, we did. One of these guys in the chat had talked about Tyson, and we looked into it, and it looked pretty good. That was a few weeks ago, maybe a month ago. So yeah, it's definitely popped up. Shout out to TSN Chicken Nuggets. Nice. Yeah, I just want to get caught up a little bit here, but as I'm
Tyson's got, it's down right now at like a PE of 7, and it's got a great dividend. It's not sky high worth of a dividend, but it's almost coming in at 3% worth of a dividend. And it's the world's second largest producer of beef, pork, and chicken. And you can't go wrong, in my opinion, with it, unless the world goes vegan.
Do they have exposure? What is their exposure to the whole plant-based thing? Because I don't know if that's ever going to take off, but people do want to buy it.
I think, they do have exposure to plant-based. I'm not 100% sure if that's the primary focus or growing focus of theirs, but, I was reading an article earlier today in which it stated that it wasn't necessarily their primary focus, for obvious reasons. I don't think, I think in 2020 and 2021, there's this massive trend, if you remember, Impossible Burger and the IPOs and everybody, and I think in a bit of time, we saw that kind of fade out a bit. Now, I personally, I really did go like 90% vegan. And
oh, really?
I got to say, I love the diet. But, when it comes to Tyson, because everybody else out there is still going to be chowing down on chicken, beef, and pork, I'm all in for the dividend. So please continue.
Yeah, I actually a few months ago I went just to see what would happen. I went 2 months without eating any chicken. I don't really eat much red meat anymore, and fish. So I had 0 for 2 months, and I didn't really feel any different. I didn't notice anything. I'm just a naturally tall, skinny guy. Come to terms with it. That's going to be here. KC, what's up, KC? Talking about your AMT. So they restructured into a REIT in 2012, which is why they only have a 9-year dividend history. So I did not know that, too. KC, always with the knowledge drops. That was Steve C here, who wanted to look at HBI. I'll tell you what I'll do real quick is I'll just show you guys what Simply Safe said about good old HBI. They had their note, which is pretty cool. And you can check this out too, Ari. They do these notes. So in this latest, which is what I alluded to earlier. Let's see. Come on. Here we go. Isn't this fun? We get to watch the spinning wheel of death here. I don't know. I plugged the dang thing into the Ethernet. So I skimmed through this. Actually, here we go. I'll just kind of go through it like this, and you can pause the video later. So you can read all this, but they said that 40% of HBI's debt totals about 1.6 billion, which is 40%, will mature in the next 18 months. So they're probably going to have to finance at higher rates. And if they do that, they say that it would imply that the annual interest expense could increase $55 million to $65 million alone, which is about 9% of their 2021 profits. So as they show their free cash flow, they're currently negative $1.67. They've been burning through free cash flow.
This reminds me of a VF Corporation almost.
Yeah.
It's very similar.
And so they basically said they're stuck with higher inventories. People have stopped spending as much on their products, and all in all, that is they think they could rebase the dividend, reduce it by 30 or 50%. So they could help to navigate these ongoing challenges of rising interest rates. So that is interesting, Steve. If you want to keep an eye on that, they downgraded their dividend from 36 unsafe to 20 very unsafe, in the opinion of Simply Safe dividends.
We should have some fun with this one almost. Russ, would you invest in Haynes if right now $1,000? Would you throw in $1,000 into Haynes?
Nah, it's I honestly I haven't really dug into it, but I just no, I don't. I would just rather invest in other things. I probably go more into. I think I would wait. You know what I mean. I if they cut that dividend, people are going to dump. Just kind of like VFC. I mean, they still could. They got a new CEO. He may want to do it his way and say, you know what, I don't care. This is why I always say that all of these businesses are living, breathing entities, and the first priority is the survival of the business, and they're not going to let the business die because of some dividend streak. So if he needs to cut the dividend, maybe that dividend's going to get cut.
But at the end of the day, it's an interesting, right? I think situation to be in as an investor. Let's say you're invested into Haynes and they're going to cut their dividend. Now, this brings me back to AT&T's decision, right, with Warner and their deal to spin off. And I just kind of go back to that and saying, okay, they had a 7-something% dividend. They slashed it. Heck, even at a 3-point-something% dividend, I would still take it. Now, I have shares of AT&T. I haven't been buying in this position, and honestly, I'm waiting to sell out of AT&T as well, just trimming down my portfolio. But I don't necessarily think a dividend cut in the situation like Haynes, right, would necessarily be a terrible decision from the executive wing there to move forward with a dividend cut to save the company and more so just allocate capital where they need to for the longer term. The question I have is, what is it going to take for Haynes to bring back the value in that share price? I mean, it's been devastated for a while now. And what's an interesting play is just the fact that, it's underwear and socks and, X, Y, and Z. So no one's going to stop buying them, right?
No, it's not going to be fat. It's not a fad. Eric Stevens said he told you he's not big on VZ. So I don't know. He'd like to see Simply Safe and Alpha Spread. He's reluctantly averaging down. Yeah, some of you guys have been sharing VZ thoughts. Yeah, I guess we could really quickly.
Bring it up on it's SSD Simply Safe dividends. I'm assuming, right? I'm fascinated with Simply Safe. Now I'm seeing how you're running through each stock. It's fascinating to see. To be honest, I'm not a big fan, these days of AT&T or Verizon, and I'm just allocating a lot of capital elsewhere. Not to say that I think Verizon's a bad stock, but I definitely think there's better growth opportunities that I'd rather allocate my capital towards.
Yeah, so they still give them a safety score of 87. Their yield is currently 6.98%, so kind of like you just said, pushing that 7%. Let's see. Their dividend growth, that's what I wanted to go to. But I think they did reiterate. They did a nice little write-up on it. But yeah, 38 years they've paid that dividend for. 15 years they have consistently grown it. But look at the CAGR, 20-year, 3% CAGR, not very good. 2% 5-year, 2% their last increase. So those dividends are just growing really, really slowly, as you see there. 29 days away from their next dividend, so January 9th. Jump on that. But
I think plays like AT&T and Verizon would have been, the word I want to use is like a hot investment or a sexy investment, like early 2020s and mid 20, not early 2000s, excuse me, right? Because it's like where we're at today. Again, it's like modernization is happening. It's happening now. And as Verizon and AT&T, I don't foresee these companies leading us, into the future at this point.
I don't think they invested enough into what is it, fiber?
Fiber. You got 5G now, but this stuff is not. It's not as sexy. It's not as exciting, I think, for investors now today. Which is what I'm like. I think Verizon's an incredibly safe play for sure. They're a carrier, but
yes. So
it's that growth that I'm really looking for.
Yeah. Let's see a couple of their finance. So their dividend yield is 57% above the 5-year average, which is 4.45. So And their forward PE is obviously price and valuation are two different things, but still that forward PE is 7.4, way below the 5-year average of 11.4. And their free cash flow payout ratio currently, according to Simply Safe, is 99%. So I love, with companies like Verizon, most companies, most sectors, you can look at the free cash flow payout ratio, which is a little bit more solid, right, than the earnings payout ratio, because that can be financially manipulated. But the free cash flow, 99%. So that is definitely worrisome. And so they'll show you like the earnings, the free cash flow per share currently last 12 months, $2.60. And that dividend was what? It was $2.61, right? So they are definitely pushing it, man, pushing their luck, I think. Shares outstanding, they have been diluting though. Look at that, 4.14 billion, 4.15, so 4.20 billion. That could be that they're just.
Is that as of last quarter? Is that what?
The 4.20 is the last 12 months.
Okay.
Yeah, so each one of these bars is a year, so they go back 10 years. So you could get a little. I mean, their sales, kind of been flat. I mean, but still up a little bit enough. 9% return on invested capital. Their free cash flow margin only 3%, so that's getting down.
Look, I think one of the interesting carriers to have been invested into in the last, I don't know, 3-4 years was probably T-Mobile. If any of the carriers out there, I think T-Mobile really, once AT&T came out with their news and they went through a bit of their restructuring, T-Mobile really came in hot.
They've eaten their lunch. They've cleaned their clocks with T-Mobile or with Verizon and AT&T. So here on Alpha Spread, and again, you can change these valuations. This is just their stock. So they give an intrinsic value of $53.70, which is 30% under the current price. And then their bear case, the worst case scenario, is $36.10. And where'd that go? So you can like change the DCF valuations. They'll bring you to this page. So if you wanted to do your own, they got some of their competitors on there. But so this is the model. You can just play with the numbers. But to get to that, they show a discount rate of 7.25%, 5 years, and the terminal growth negative 3.59% for that base case. So for the next 5 years, they would expect it to grow. I say base, I'm not worse. But it's a really interesting site. I mean, and then they'll show you from the numbers you pick, they'll base it out, they'll build it out, show you year one, the forecast, and then all the way to the terminal. And I mean, you could just, it's crazy. Like they have so much on here that you could do with yours. But that was just their the DCF financials. It's pretty in depth. It's a really in depth site. I mean, we could spend probably 2 hours going through it. But there it is. So, but this is just their discounted cash flow. It's $5, But that's obviously a worst case scenario. So, there you go with that. And crap, man, look at the time. I can't believe how fast these things go. It's just crazy.
Flies.
Sorry, guys. Let me buzz through the comments here because I know I've been. Let's see, a couple of them. We won't go through all of them. What do you guys think of SWBI? That doesn't. With Target mentioned they lost $500 million in theft. More gun purchase. Oh, SWBI.
It's Smith and
Smith and Wesson. Yeah, I don't know. Small company. Let's see. The banks. Caleb, what's up, Caleb? Says banks have been paying dividends for 20 plus years and use very little leverage. Yeah. And the higher interest rates are going to be good for the banks too. So
I was going to say, I think right now is a great time to get invested and double down in banks. I mean, we're going to be, as far as I'm concerned, in a higher interest rate environment easily for the next 8 to 12 months. And that's something that the banks are going to be the biggest beneficiaries of, aka investors into banks. We'll see that as well.
Yeah, and I unfortunately got out of JP Morgan. I had 100. So I was doing, my covered calls and whatnot. So
Are you
anyway,
with JP Morgan?
I had 100 share, or I had 110 shares at like 113 and change. And at 122, Casey remembers this, I got the shares called away. And then I sold cash secured puts for 2 weeks in a row. and then the news came out and everything just jumped up, and they have not come back down yet. So, but yeah, it's all right. I've been instead. I'm similar. I'm going into BDC. Not similar. I mean, I'm going into BDCs now, but yeah, she said back on oil. 12 million of China credit impulses. Dude, you guys would have so many good conversations. She doesn't like macro, but she knows a lot. 12 million of China credit.
Does anyone really like macro? I mean, it's I think macros matter, and I mentioned this last time, but honestly, man, it's really boring. A lot of it, right? It's all news and just global events, what's going on. But in some sense, I mean, you got to know. I think macros do matter as an investor to have whereabouts and at least that broad overview.
And it's funny. I think of it as I know over the. I see both ways because I know over the life of the market, it's only gone up and to the right, and there's those punctuated. Sometimes the punctuations are a little bit more prolonged and deep, but it always recovers and it always goes back up and to the right. The market as a whole, but yeah, with macro, I mean, if you know something's coming down the pike in the near future, you could potentially wait and get a better price on some things, but then it's almost timing the market, right? If you're doing that, so.
Yeah, the key, I mean, at least for me, that's where I've seen the most success in terms of dollar cost averaging and using macros is just continuing to dollar cost average. And when something hits, volatility really hits the market, then I'm able to throw more money into the market. And this is something that Peter Lynch, he used a lot of macroeconomics and trends, as an investor. Initiated a position with Medtronic. I loved it. Medtronic is also in my portfolio. Is it in your portfolio, Russ? Medtronic?
So one share in the
okay.
Roth. I just wanted to get one share of it. Yeah, I don't know.
Just in case.
Yeah, I know in the community it's a little mixed. Some people think it's a value trap or a dividend trap, but yeah, they still get a good rating on. I was just typing out to him. He wanted to know about Devon Energy, DVN. So they have just a safety score of 41, which is border. It's low. It's borderline safe. They have a yield of 8.67. I should show this. I'll just show you guys.
It's a utility play.
Yeah, this kind of made me laugh with Devon Energy. I know a lot of people like them. I know a lot of the community like them, but they have. Their last dividend growth was only 369%. You think they're flush with some cash? Yeah. Dividend growth, only 4 years. I mean, that's crazy. But we see they had been cutting, and then all of a sudden it's just 16%.
Talk about a classic bait and switch, if you will.
Yes, this is interesting. Are they foreign? No, I don't think so. Because this shows that there was a reduction from September to December. So I don't know. I would have to look at that. And if that's the case, their dividend yield is 192% above the 4-year average, which is 2.97.
Do you have a criteria? Like when you're looking to invest in a particular dividend stock, do you usually roll with criteria of, that dividend yield where it's at? Like for me personally, I usually try to hit between 3 to 4.5%. Do you run with that, or are you?
I'd like to. I kind of get turned off if it's under 2 at the very bottom, and I shouldn't because I know there was a study I read sometime back. I know it was Hartford Funds. I don't remember who did it, but they kind of did a higher yielding but lower growth, but lower yielding but really higher growth. Which one performed better? And in like 10 years' time, the higher yielding, lower growth did better, but then the further you went out, as long as they kept that growth up, then the lower yield but higher growth outperformed. It wasn't a crazy amount, but it still outperformed. And
sure.
Yeah, so I don't know. It'd be nice to get like right around 3% for me, ideally for a starting yield, but it depends. It all depends on the company. Starbucks is one that has a lower starting yield, but they grow that dividend pretty quickly.
Oh yeah, I doubled down in Starbucks last year.
Yeah,
I think that's Ryan. If Ryan is still out there, I know he was doubling down on it as well, and I would see his videos, and we'd go back and forth with Starbucks.
Yeah, she's KC is big on LA.
Casey's all over it.
Yeah, and Franchise Group, which is an interesting company that we've chatted about. Um, yeah, here we go. Shamir said, "What utility stocks? Would utility stocks be a buy with more EVs? Seems like the grid is struggling to keep up right now. I still think it's going to be in the. I still think uranium. I think nuclear is going to be the way to go. I think I need to read more on that, but." Again, just going back to the ship I was on, the John C. Stennis, there was, I think, four. I want to say, I think there was four micro reactors, and dude, those things they refuel every 10 to 12 years. It's crazy. Like the lights will stay on for 10 to 12 years before they need to go in and have the rod swapped out or whatever it is that they do. It was all secret to me. They didn't really bring us down there. It was a really secure area. They didn't let just anybody wander down by the nukes. It was really, really restricted. Obviously, because you could cause a nice little, international news
To
story.
say this international disruption.
Yeah, yeah. So, yeah, I don't know, man. But I don't know when that's going to be. That's just my guess. Again, trying to be like Gretzky and skate where I think the puck is going to be. So, but yeah, for me, I'm watching URNM.
I think too to say it's a bit of a trial and error too right now for the most part because oil has not phased out and I think we are trying our best to just make a green footprint in any which way we can. And so as long as we're reducing, honestly, as bad as this sounds, as long as the media spotlight isn't on a lot of these companies, that's what it really comes down to. No one wants to be caught red-handed using coal, right? Like, so they're all going to big business will back away from it. But, that's my 2 cents.
There you go. Casey says to Stephen, you may want to look at EEXI and EEDI regulations coming on. I don't know about those. Maybe I'm assuming that's European Union regulations coming online. I don't know. That would be my guess. Yeah, look at that. See? Yeah, Ryan said TSN's looking great.
Here we
Yeah,
go,
we
Ryan.
chatted about it.
I'm going to throw the same deal out to you, and you know what? I'll throw another 1,000 in, Ryan. If you throw $1,000 into Tyson Foods, I'll put 3,000 in.
Look at this.
Let's just
guy.
have some fun. I'm confident in Tyson Foods.
There we go. Casey's she can't get past TSN CFO getting arrested 6 weeks after taking the post. Hard for her to trust that C-suite, no matter how good the setup is. What did you think about that when he was getting arrested? That was the.
I got the news. So first of all, I've been making jokes around the office all day. I mean, all week since I've been talking about Tyson Foods. I think the guy's a coward, but Tyson is gonna run. It's a business, and so as much as I think the guy's a schmuck. And he shouldn't be, his father's on the board, by the way. So go figure, right? Like, I don't think much is going to happen. Your father's on the board. You're the CFO. He's a schmuck, but at the end of the day, I think that Tyson Foods and then we're looking at the world's second largest producer of chicken, beef, and pork. That's just not going to disappear because the CFO is who he is.
Yeah. Yeah, and then she said she's Scott's Miracle Grow. We've talked about a while ago. There's nepotism rife within that company. So yeah, that's interesting. This is what I love to hear everybody's thoughts on.
Yeah, look, I think if it got bad enough, this kind of like in some sense, it's not the same situation whatsoever. But I want to mention Boeing, right? Like back in 2020 when planes were falling out of the sky, that was way worse of a situation than a drunken CFO, right? Barging into some woman's house, sleeping in her bed, and so I think I was able to capitalize on Boeing, and I think this is just an opportunity to capitalize on it. Yes, they did miss on earnings, and they did actually rise in sales, so that was nice to see. And then what if the worst news right now is the CFO? Like, I'll take it. And I hope to see a rebound. And I think it could almost be a solid swing play if it was in your, Roth IRA or traditional IRA. Perhaps you can swing it, make some money there. But I think it would be a nice buy and hold for the next 12 months. That's my opinion. But I'm not a fan of the CFO. I want to make that clear.
Nice. Let me get caught up on few more of these. Just we don't have to just Kroger. It's on Shamir's watch list. Uh, yeah, Casey said there's a reason T was able to get completely sidetracked trying to be a media empire, right? They reminded me of the media version of GE. Just things that didn't have synergies, just trying to just become the blob, Um, yeah,
Look,
they counter.
AT&T can make a nice comeback. I believe they can. I think they need to focus on two areas, and that's their 5G network and their marketing.
And then Davy Jones getting out of that locker, I hope he said it's Simply Safe dividends free to use. Buddy, it is not free to use, and it is really expensive. Like, it is prohibitively expensive, but I'm rolling my YouTube money, what little bit I have coming in to pay for Simply Safe dividends. And so I can do
What's
this.
the ballpark for Simply Safe?
So they lock you in when you get in, and I got in a year ago, and it's $399 a year, $399 a year. And right now, it's $499 a year. I mean, you do get a newsletter, and they just update like crazy. Brian Bollinger is who he started Simply Safe Dividends. I mean, I wish I would have gotten in I don't know, 2015. I think they started it. It was probably like $25. But
do you do any affiliate marketing with them? You're not. You literally just use it. Okay. So
Yep.
I want to ask you. I'm going to throw you in the spotlight.
Yeah.
You've had Simply Safe. You've been using Simply Safe. Would you recommend Simply Safe to all of us?
Oh God.
Like, do you see that
absolutely.
value coming in
Well, yeah. I mean,
for $3.99?
I guess it would come down to it if you had, I would say at least 10 grand or so in a portfolio. I mean, if you got a couple $100 you're playing around with, no. But I mean, if you had substantial, put it this way, if you were doing your handling everything, I think it would be worth it because they just give a lot of really good information. They make everything really easy. I didn't even show you the portfolio. Like, they do a portfolio overview, and they'll show. Actually, here, since we're on it, I'll end with this. I'll just show you the portfolio overview because it's not really a tutorial here, but it's right at the top. So they also have their portfolio. They give ideas. This is what I wanted. So
do you find their recommendations or their suggestions or ideas are on par with, because
so
I posted a video today. I got pretty upset because I just saw, on what was it, Friday, an article by Motley Fool, and it's like, investors buy Coca-Cola right now and buy Costco right now. And I go and I look at the stocks. I'm like, really? This is what you're going to recommend to people. So do you find that Simply Safe's recommendations, if they are recommendations, are on par with buy-in prices?
So they built 3 portfolios. They have a conservative retiree portfolio, their top 20 stocks, which is a blend of income and growth, and then their long-term growth portfolio. So if you were a conservative retiree, this is kind of what they have, and then they'll, you can sort it, by dividend safety score. If any of them look weak, it would be paychecks. But then, as I was showing, then they'll obviously give the updates. They'll say what they're thinking of selling, what they're thinking of doing. They have a screener tool. This is nice. Dude, I could be on this for the next 2 hours, but this is cool. So here's your dividend aristocrats. You click on that, you can just sort it. So you can, right now it's by undervalued. So VFC has a dividend yield 193% above the 5-year average, and then it's descending in those.
Stanley Black and Deckard, I love to see it up there on that list.
There we go. Yeah.
Man, I invested thousands into Stanley Black recently.
Yeah, so they give it a safety score of 90. Then you can sort dividend growth, and you can build your own screener in there.
And T. Rowe Price is another stock that I gave a shout out today in one of my videos, and this is nice. This is nice. And Medtronic is up there.
This is what I was going to show. So I got I'll just do the consolidated portfolio here of everything. And do you know what's weird? Sometimes when I'm recording, my stuff loads slow. I think it's a RAM problem. Quite honestly,
Just say it could be you're running the video, and
I think so, because I'll check the speed and I'm at like 400 or whatever. But so this is, I mean, you could just pick there's all the different kinds of columns you could pick. So if you wanted to look right here, this is what's useful for people. This is every stock that I have that I link right to Schwab, so I don't have to do anything. It populates every night, but it right there, so you can go down and see what's safe. Or so most of it's safe, but we'll go to the bottom here, and I think I have. So the worst one is BTI at 45, and then I have several that aren't rated. They don't rate some foreign ones. They don't do everything, but yeah. So like some of the REITs, like BTI, Stag, Energy Transfer, IIPR. But it's nice for that, and then you can get a quick overview if I want to see which dividend is currently the most undervalued. Right now, it's IIPR. Their dividend yield is 106% above the 5-year average. It's a really solid platform for the price, and obviously you can sort by ex-dividend dates. I mean, there's just a ton of things to do on it, and I think it's worth it. But yeah, it's a lot. I'm not gonna lie. It's pretty expensive, and they keep raising the price. So I guess they're making their money.
It's working. It's working. You know, it's at the end of the day, someone's brokerage account is their scoreboard, and if you got the money, like I said, like I think the wisest thing an investor can do is just make sure, no matter what platform you're using, Seeking, Tip Ranks, Simply Safe, any of these platforms, as long as you're able to find all the due diligence that you need to make a wise investment decision.
Yeah, I gotta do it. I know I'm over time here, but really quickly, like Ryan and I were talking. Yeah, I've found a podcast or a podcast channel, I guess, that has all of the Berkshire annual meetings from 1994. It is just really cool, and I've been listening to them as I've been having some of these long drives at work, and it's probably going to take another month or so, but I will have listened to every minute of every annual meeting since 1994. And
how many of you listened to this for?
I'm almost through 1996, so I'm almost through 3 years. And it's really interesting. Somebody asked a question to Warren and Charlie and said, when you look at annual reports, like, what are you looking for? What are you doing? And Warren said that the only thing that I want to know is, I imagine that I'm a partner in a business and I had to go away for a year, and then I came back, and the annual report should be my partner telling me what happened the past year, where we're at, what the numbers are, and then what they expect in the coming year ahead. And it should be like the good, the bad, like just everything. Fill me in, because I haven't been here for a year. And he said he gets turned off because sometimes they're real salesy, or it's like they're trying to sell you the company instead of just telling you, like, sticking to the facts. But anyway, he said that you have to read the annual report, because that's the only way you're going to get your arms around the business and fully understand that. You could look at a Wall Street report, or you could watch a news, listen to people telling you about it, but unless you read it for yourself, you are not going to fully understand the business. And then you have to take it a step further and look at, like, the company's main competitors and even lesser competitors to see what they're doing, to really get a good benchmark. He said it takes him about 45 minutes to an hour to get through an annual report. And he said, if you're doing your company you're looking at, and then you got 6 or 7 competitors, he said it's a considerable amount of time. But I really found that interesting. And I thought, you know what, I've skimmed through annual reports, but I'm really now trying to build my own way of what I need to look at, and just the numbers. And so Ryan and I were talking about that. Yeah, as you see, if anyone was looking, I got a tab open from the Celanese annual report that I was reading through.
What I love about Buffett's advice, I mean, it's time tested, and I mean, he'll go to the grave with all his advice, and I can tell you, in a decade from now, we will still be talking about Warren Buffett and the advice he's given. One of the best, pieces of advice that he's given that I've seen in a video is to look at investing as if you're about to buy a plot of farmland. And that's to say, go walk the land, understand that you're not going to buy a piece of farmland and sell it by next Tuesday. Like, you are investing into a farm. And so you got to know the ins and outs as if you were the farmer, and that you're going to own that farm for the duration of maybe the rest of your life and pass that down generationally. And unfortunately, I think a lot of that is lost with a lot of the new applications that are coming out, and it makes it look like investing is a game. But I always go back to, if investing is fun, you're probably doing something wrong. And double down on your due diligence and know who you're, getting advice from. Just incredibly important.
Yeah. So, man, I'm sorry for all you guys' comments. I hope you've been reading everybody's comment. Not you, but everybody in the comments, reading everybody's comments.
Yeah, I was like, I
feel
can't see anything on my end.
Yeah, I missed so many. I'm so sorry, everybody. I want to give a shout out here. I popped into Nora's channel this morning, and it was kind of cool, like having some fun there watching Nora, the stream queen, the queen of stream, I think I call her. That sounds.
It is the Stock Explorer. I got to get to that channel.
Yeah, Nora the Stock Explorer. So yeah, she has fun. Yeah, thanks. And yeah, she said hi, Ari. Or no, Coffee Time did. I'm sorry. Their logos look similar, I think.
I will jump on the channel soon.
Wait, didn't I see Nora in there? Am I hallucinating?
The only thing I saw was the Stock Explorer. That's
okay,
Nora?
So, yeah, it was there, right? I don't know. I'm scrolling through these comments so quick. I really do appreciate it. Yeah, okay. So here. Oh, she changed her logo. My God, what am I thinking? Anyway, it's yeah. So awesome, guys. And dude, sorry. Steven, again, buddy, thank you. Like Steven just gave $5. I'm telling you guys, save your money, invest it. Buy your relative or a kid something nice,
Is that what is it? It's like a handshake or something like that you can put on your YouTube channel. What is that, the community page?
Super chat. Yeah. So it and I completely missed it. So when somebody pays you money like that, gives you a tip, a donation, it comes up and you see it. So someday, if I were to have like 500 people in the chat and it's just rocketing by and you can't even keep up, if somebody does a super chat, it like highlights it at the top so you can click it. It's just a way to, I guess, get your attention and show the creator you appreciate them. But again, Steven, dude, thank you so much. And I tell everybody, I'm like, if you feel you must give me money, then okay. But I'm going to reluctantly, I guess, accept it and say, save it, spend it on yourselves. You don't have to do it. This is a hobby. I'm doing this for fun. I like it. But yeah, you guys were doing stuff. Ryan's talking about Peanut, I see. Casey want to know if anyone takes Motley Fool seriously. I've never really done on it. So.
I have to say I do a lot of webinars at Tip Ranks, and yes, a lot of people take the Motley Fool seriously, and so that's why I say just make sure you double down on doing your own due diligence. No matter where you get your information from, I'll just say it, whether it's me, Russ, Ryan, anybody out there, it's like, you have to be an informed investor. In order to be informed, it's not just watching a YouTube video or reading an article. It's like, do your own due diligence, understand the company, and invest thereafter.
And there we go. There we go. Is that Casey said she's never really paid for anything, and free's the way to go. And it absolutely.
Does she have her own YouTube channel?
No, she won't come. I've tried. She won't. I said you can even do faceless. I don't care. Like, you got so much good information. But yeah, I said it's nuts. Buff can process a 10K in 45 minutes. Takes her 2 hours. Hey, the guy's been reading them for, God, probably since the 50s. He's been just like I read his biography that Ryan turned me on to, and by Lowenstein. And he said he reads the annual reports like other kids read comic books. That he's just been in love with them. So
there's a fascinating documentary, and maybe Ryan has seen it, or you, Russ, have seen it as well. But a fascinating documentary on YouTube. It's for free, and I don't know the exact name of it, but I know if you type in Warren Buffett documentary, it starts off with like a bunch of bottle caps falling. Highly recommended. Highly recommended.
Becoming Warren Buffett. That's what.
That might be it. Yeah.
Yeah, I know.
It's just a short, nice documentary you can watch on one of our investment stages.
All right, I think I'm going to end it there. I usually keep it about an hour. Dude, what time is it there? It's got to be getting close to midnight, right?
We're looking at 11:24. We're rocking and rolling, man. Yeah, I'm sipping on my tea. It's a good night. Before we close out, I gotta ask.
Oh God, yeah. Say whatever you want to say, man. Plug whatever.
We got. I
Whatever you want to
mean,
say.
I think this is just the Super Bowl of a week for the market. We're concluding 2022. We're about to enter 2023. We have two mega events happening this week that's going to set the tone for the remainder of the year and entering into the new year. We have the CPI report coming out on the 13th and the Federal Reserve coming out of this blackout period with their interest rate hikes. What's your 2 cents? We could do like a minute long spiel here on your 2 cents. What you think is coming down the pipe?
I think I don't. Okay, put it this way. I think it's either 50 or 75 points. And if it's 50, I think the market's going to fly up. If it's 75, I think the market's going to tank. But I just put in the chat there. I don't know if you read that John Malden newsletter I sent. His weekly one came out now, and he ended it by showing that even when there's a pivot, and when there's a cut, that if there was a 75-point basis cut, that the market was down over the next 6 months. I think it was like almost 4%. But the slower the cut, the better the market liked it. So the market didn't even like quick cuts. So yeah, and he kind of summed it up saying that everybody just is expecting, that a pause is a pivot, and he's like, a pause is not a pivot. It's just going to be that eventually when they pause, they're probably going to let that ride for a few months and then see where things are. But yeah, I think in the short term, and as a dividend investor, baby, I'm hoping for 75 basis points, because that means I'll be able to hopefully get some better deals. And I'd love to get McDonald's cheaper. The damn things.
I love McDonald's cheaper.
Again. I want those COVID prices. I don't know if we'll get there. I was buying it at $150 a share in March, May.
I would love McDonald's and Coca-Cola at COVID prices. I mean, I would throw thousands into Coca-Cola and McDonald's at COVID prices in March of 2020. I think a big regret of mine was not buying more Coca-Cola. But look, I think we're going to have opportunity coming into the new year, which I'm very excited about. Just totally on a macro, level. I think Jerome Powell's not here playing poker with all of us, and I think we're going to see a 50 basis point rate hike. And I think we're going to rally towards the end of the year. And by the time we get into earnings season of 2023 to kick us off, I think we're going to be in shock that companies really haven't been performing as we would like them to. And we might get some volatility. And I'm watching that yield curve. Twos are still above the tens. And this is very alarming. It should be for everybody. And we got bankers from Jamie Dimon to David Solomon all talking about a recession, mild recession, bare minimum. And then what a guy that I'm really focused on right now is Doug McMillon. That is the CEO of Walmart. And when he speaks, I'm listening to him for the data that he's sharing with all of us, because he's talking about the trends of the consumer and how they're spending, what they're spending on. It is fascinating.
Yeah. If we weren't getting off, I should have probably brought him on.
We should do one next week, maybe. If we could, can we do 3 people on here?
We could do up to 6 people. So
we should have brought Ryan in.
I texted him because you hadn't shown up, and I was like, hey man, you might be my plan B if Ari can't make it, Anyway, so about Coke and more alcohol. I don't know what they got, the Topo Chico or Chopo Chico or what it is. I don't know. I think they're going to try. They're all trying it. We got Pepsi with the hard Mitten Dew. I know I did the video and I did the backflip for the Mitten Dew because I don't remember what. I was in the Ozarks and I did a short of it where I did this funny little skit. Yeah, I tried because I never had tried the hard, I call it Mitten Dew, the MTN. I tried the Mitten Dew, hard Mitten Dew, and I don't know. I said something silly and I ran and did like a flip into the water or something. I don't know. It was crazy. I was on vacation.
How was the drink?
Not really my. I don't really
I'd imagine, soda, yeah.
But I wanted to support my brand, and it's I don't know. The kids all like it. The Mountain Dew. Okay, see, everybody's coming right when I'm like gonna go. So Darth Dividend, we get him too. All right, Darth.
4 people. Next call.
If you guys want to host it, yeah, you can do. If anyone wants to host it on your channel, I think myself, Ari, Darth, Garrett. I don't know if he wants to. Oops. Darth, Ari, Ryan, and myself. I mean, I'm game. So you know me. If or I don't think I'm doing anything Friday. I don't know. I don't care. We'll talk. We'll talk it over if you guys
put it like this: whatever will best help the investor out there. That's what I'm game for.
Yeah. So I could.
But it would be actually interesting. Here's just a thought right off the bat: is an end of the year, end of 2022 dividend chat, and just talk about our dividend portfolios. Maybe what we've seen, what's happened throughout the year, what we're planning for 2023. I don't know if that's something that anybody can comment on. If that's a nice idea you'd like to watch, but I don't know. I think it could be a great video between the four of us. And I think, my hat's always off to you guys. That I'm just honored, and it's been a privilege to be on YouTube creating videos with all of you guys, and in this dividend community, sharing the knowledge and hopefully helping just as many investors as we possibly can with value in dividend investing, providing information and stock ideas. That's the name of the game, I think, for all of us.
I agree, and I completely forgot to play this for. Let me see which one I want to play. I don't know. Oh, dude, I have these things preloaded, like this.
Ooh, yeah, dig it, yeah.
I wanted to play that for Steven, man. Thank you for the. I got these little videos that I put in there. Like I got Ryan's Art Expo goofiness. I don't know if you've seen that.
No, I haven't seen it.
Yeah, this is just some people hanging out. Yeah, Ryan Williams, dude. He had some of his art. People came in. It was the hot ticket in town. Everybody was looking. They loved it. Yeah, so that's.
Ryan is such a great guy, great creator out there, but just a great guy. It's been Darth, you, like the whole community I love, but and when I go video to video through each of you guys, it's just nice to see everybody's personality coming out in their videos, and I'm honored. I really am.
Yeah, they're good. Ryan saw it, so all right, I love it. He works Friday to sign. Well, we'll figure it out. I think we'll get on a group text or whatever. We'll figure that out. So we'll set it up. We'll see what works for everybody. And I think we're hang out for a minute, Ari. I'm gonna end it with my signature now, my signature ending. And then, so everybody, again, check Ari's channel out. It'll be linked in the description below. I think I forgot to put it in there. I put your name in there, so
I got a tag or something in one of the videos.
Yeah, I think you could click on the tag. But everybody, thank you for hanging out. We went a little long in this one, but man, I appreciate it. So. Ari, thank you for joining us, and I really hope we can get this together and make it work next week.
Always a pleasure.
Yeah. All right. See you, everybody.